Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CONCH Venture interim report. China CONCH Venture Holdings Limited offers a diverse range of businesses and services, including energy conservation solutions, residual heat power generation, waste incineration, and energy preservation equipment, environmental protection services, waste disposal, sludge treatment, and recycling of lithium batteries, port logistics services, cargo handling, transshipment, and warehousing new building materials, cellulose fiber cement sheets, autoclaved wood wool cement boards, and alternative wall building materials, new energy solutions, lithium iron phosphate cathode and anode materials investments in various sectors, construction, engineering design and construction services, property development, and ancillary services, resource recycling and technical consultation, kitchen waste collection, and harmless disposal packaging container production services. The stock price surge of CONCH Venture Holdings over the past year, China CONCH Venture Holdings Limited, has seen its stock price skyrocket by approximately 95.61%, driven by a consistent focus on green development and expansion into new energy sectors. The company's strategic efforts in environmental protection, new energy materials, recycling, and port logistics have contributed to this significant appreciation. Key drivers of the positive sentiment include extensive project development, with 131 projects signed across China and Vietnam, and a deep involvement in new energy materials, aiming to become an industry-leading intelligent manufacturer. The company's commitment to environmental protection, pollution control, and clean energy solutions has also been a major factor. Additionally, effective cost management and improved operational efficiency have contributed to higher profits. These cumulative efforts have collectively contributed to the significant appreciation in CONCH Venture's stock price over the past year, reflecting investor confidence in the company's sustainable development strategy. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. 1. Increased waste intake volume and on-grid electricity generation in the municipal waste treatment business. 2. Improved capacity utilization through internal optimization in the new energy materials business. 3. Optimized technologies and techniques in the recycling and reusing business of lithium battery resources. 4. Notable rebound in throughput volume in the port logistics business. Revenue decline drivers. 1. Decrease in sales of goods for CONCH Holdings, Kawasaki HI, and CKEM. 2. Decrease in service rendered by CV Group. 3. Increase in distribution costs and administrative expenses. 4. Decline in waste incineration solutions and energy-saving equipment due to decreased construction services and increased operation services. These factors have contributed to the overall revenue growth or decline of the company. Net income and profit margins experienced fluctuations between 2024 and 2025. Net income increased by 9.33%, but then decreased by 1.55%. However, it also saw a significant increase of 22% on another page. Profit margins showed more consistent growth, with the gross profit margin rising to 38.38%, an increase of 1.67 percentage points. The breakdown of business segments revealed varying trends. Waste incineration solutions and energy-saving equipment saw increases in profit margins, while new energy business experienced a decline. Port logistics maintained its high profit margin at 58.18%. The operating profit margin decreased slightly from 28.8% to 28.7%. These changes suggest that the company's performance was mixed across different segments and time periods. While some areas showed improvement, others declined or remained stable. The company's financial performance indicates a consistent generation of positive operating cash flow. For the years 2024 and 2025, net cash generated from operating activities stood at RMB 938,672 and RMB 914,849 respectively. This trend signifies that the company is efficiently managing its operations to produce a surplus in cash flow, which is a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes. While the total liabilities increased slightly from RMB 33,149,551 to RMB 33,402,292, a closer look reveals that non-current liabilities decreased by 8.06% and current liabilities increased by 38.73%. On the other hand, interest expenses saw a notable decrease across various categories, from RMB 494,109 to RMB 416,294, from RMB 453,601 to RMB 388,771, and from RMB 353,785 to RMB 334,276. These changes indicate a reduction in the company's interest expenses despite an increase in total liabilities. The company's financial performance reveals a mixed picture across various segments and regions. On the positive side, municipal waste treatment, new energy materials, recycling and reusing of lithium battery resources, port logistics, and waste-to-energy projects have performed well. These segments have shown notable improvements in capacity utilization, throughput volume, and profit margins. In contrast, some segments have underperformed. The net profit of principal activities has decreased by 6.02%, indicating a decline in overall profitability. New building materials business and new energy business have reported losses, with the former suffering a significant loss of $13,213. These poorly performing segments will require attention to improve their financial performance and contribute to the company's overall growth. Management is emphasizing a strategic shift towards new energy business, diversifying product portfolios, and exploring cooperative models to boost brand competitiveness. Additionally, they are prioritizing raw material procurement and supply chain development for key materials. The company aims to repay debts and fund projects through the proceeds from its 2025 Green Medium-Term Notes issue. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, with evidence of dividend payments found on multiple pages of the report, 43, 44, 45, and 63. Secondly, the company has also bought back shares from the market, as indicated on page 44. These actions demonstrate the company's commitment to returning value to its shareholders through both cash dividends and share repurchases. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals potential issues with inventory buildup and supply chain disruptions. On page 57, the total inventory increased significantly from 273,341 to 348,220, indicating a possible accumulation of excess stock. Furthermore, on page 23, there was a decrease in project/orders for waste incineration solutions and energy-saving equipment, which could lead to supply chain disruptions. Additionally, the Asia market revenue decreased by 22.47% due to a decline in overseas orders for energy-saving equipment, page 25. This decline is particularly concerning, as it also resulted in a significant drop of -78.52% in gross profit for the new energy business segment. These indicators suggest that the company may be facing challenges with inventory management and supply chain efficiency, which could have long-term implications for its operations and profitability. That concludes the financial summary for CONCH Venture. Feel free to comment below, and I will be happy to answer them when possible.